and then we can have it. The first reason is to be able to have people that you want to introduce to come over and just get a bigger glimpse. The second reason why I'm doing Tuesday nights is to be able to help agents learn more. So agents are learning more, they're getting more used to the language, to the products that we have available, kind of simplifying the process of digesting a lot of information that we can, instead of reading books, you can come here and kind of see applications of it. So how do you digest it? So that's the third. And then the third one is to be able to offer an opportunity for your clients to see this as a business opportunity too. So they may, just like you at one point, you saw this as a business opportunity, but you also saw this as a product for yourself. So introducing those ideas to people, that's the reason for the Tuesday night. Now, when I was in sales, I did what I'm doing right now with you guys. I did this in sales for 20 years. I taught a group for 20. So I did it live before internet was a thing. And then as we moved around, I kept the group that I would leave a town and move to another town, and I would keep that group into online. So I would record videos and send it, and then online became available. We used to use Go Meeting before Zoom was not a thing, didn't exist back then, right? Then Facebook Live became a thing. So I started using Facebook Live, which it was awesome, except there was no exchange unless you left a little comment. Zoom is better because you can see the person's face and you can engage with the client. So this is the platform for you. If you're talking to somebody every beginning of the week, Sunday or Saturday night, I'm going to shoot on the WhatsApp group, the invitation for Tuesday night. I don't want to bombard there because I don't want people to feel like, I don't want agents from Renato's underline to believe that they have, no, it's just if you need help. It's just a place for you to bring guests, because your guests are not going to come to our Tuesday morning meeting, right? They're not going to do that. We don't invite guests to our agent training. This is the place to invite guests for Tuesday. So the guests that you want to include on your team, other guests that you want to learn about the product. And every Tuesday is going to have a different theme. Okay. And the video is going to be on my website podcast. So if you go to anaferro.com, there's a little icon that I have my little picture there. Click in there. It's going to be directed to the YouTube channel. Or if they just want to look for the YouTube channel, just Ana Ferro on YouTube, it's there. There's a podcast for Portuguese and a podcast for English. I will end up breaking it down little bits because these are 1 hour. So I'm going to break it down to smaller. Hi, Brisa. How are you? Good to see you. So I'll break it down to smaller bits because we are digesting a lot of information within the hour. So it's easier sometimes to just get, for example, how to open, how to use it, how to do a withdrawal, so it's easier just to do smaller bits because sometimes people don't take the 1 hour to listen. They look at an hour, they go, well, whatever, I'm not going to listen to that. So we'll break it down. I just have to take the time to do that. Maybe if the storm comes and I'm sitting in a house for 2 days, I'll do that. I'm not doing that right now. Okay, so, okay, good so far? Good so far. Good to see you, Brisa. Okay,
Hi.
so good to see you. Is Derek with you today?
No, he's over there.
Okay, you look good. You look super
thank
good.
you. Thank
How
you.
are you doing with the storm? I saw your message. I'm sorry, I was running late. Are you doing good?
No problem. You're good too.
Good. You hunkered down, right? You got your stuff inside the house? Good.
Yep, basically.
That is good. Okay, so today's theme, go ahead. So today's theme today is all about how to use your family bank, how to open a family bank, and how to operate a family bank. Okay, can you guys see my screen?
Yes, we can.
Yeah, okay, good. So I just Googled how to open a bank account and what you need to do it. So a regular bank account, pretty much everybody here has a bank account, correct? We all have a bank account. We all know that you need to have some type of identification document to prove that you are you. So to open a bank account, you either go to a branch or you go online to the website of the business and you open it. But it's often a consumer does not know the difference in between, for example, a neighborhood bank, a credit union, a regular bank, an online bank. They just pick a name from the lots of banks that we have available and just go and open an account. Rarely they will look at what are the fees, what are the options for investment, what am I getting as a benefit? Rarely, because you know that bank such and such is a big name. You just go over there. It's a box bank. I know they're not going to fail. I'm just going to go and put my money there. Rarely you compare options, right? So rarely a person, when they go open an account, they will do their research to find out if that account is where is the best place for them, for their needs, both present needs and anticipated future needs. Okay, so most people don't look at that. Most people just go to the bank in the neighborhood and the APY that the savings or the checking does not matter to them, that they're gonna get online banking, or they're gonna that's really not how many times have you walked into a branch and said, why should I open a bank account here? Did you ever have that meeting with the bank manager before you open an account? We just don't do that. We just go and we just say, take my money, please, and give you nothing in return. I like that relationship. That's really our relationship with the big box banks, right? Because we were never taught to ask important questions. And yet we work super hard and put our money in that little box, and then they do whatever they want with it. They give us very little protection, very little benefits, and we're just happy go lucky about this relationship. It's an abusive relationship, if you ask me. It's a very abusive, and you're the one being abused. So we need banks, not necessarily, but we, let's pretend we need banks, and we need to make sure that we know how to best use those tools, just like we need credit cards in American economy. So we need to use the best ones that are going to give us the best benefits. Same thing with banks. Okay. So to open up a bank, a regular bank, you need some type of an identification, and you sometimes need a deposit. You need to go over there and you put some money in there so they can open an account. Okay, that's pretty much all that needs to be done. There are some people that cannot open bank accounts. There are some requirements that some people cannot fulfill. If they have liens on their name, if the IRS is demanding money from them, if you have some type of a criminal background specifically related to terrorism, or so there's some people that just cannot open bank accounts. It's rare, but there are people that cannot open bank accounts. How is this different from the bank that we call a family bank? So in parentheses, I'm going to introduce you to a guy named Nelson Nash. If you have not watched his YouTube biography or read his book, I would strongly recommend it. I'm going to open up my website real quick and show you where you can find these two tools, okay? So if you go on to annafarrell.com and go to financial education, when you open over here, you can go to infinite banking. I don't know if you can see that here. When you click on infinite banking, Nelson Nash changed my life, really. He was one of the people that really introduced me to this concept. And I learned a lot from him. So you can watch I put the links here. You can watch the YouTube video. It's about an hour. Tells about how he came about to the infinite banking. And then I also, you can buy his book on Amazon, but you can download it over here on your phone. And when you're, instead of flipping through Instagram, just read a page or two. It's a short book, but it will change how you think about money and the banking industry and how to create a family financial legacy for everybody else that comes after you. Okay, very, very interesting. So I just put the PDF there. All you have to do is just read the book right there. Okay. Nelson Nash. And then you can click over here and just watch the YouTube video of this. It's just about an hour. Okay, just about an hour long. I'm not going to put it over here right now because you can do that on your own. But so this gentleman used something that was available in the market, which is a bank. And he used what was available in the market, which is life insurance policy, and he blended those two to create a product that now is revolutionizing how people treat money. Okay. So before we start the class, I want to just throw out something at you so you can understand where we're going to come from when we talk about family banking. The financial world is ever changing because financial needs are constantly evolving and financial products are being introduced. How many of you knew what cryptocurrency was 20 years ago? Right? So the same way that we look at cryptocurrency right now, my grandparents looked at credit cards. They're like, what? I'm going to use money that I don't have. Then I have to pay, like, what am I paying? That's how they looked at credit cards because credit cards were not a thing, right? The Federal Reserve, go ahead, Gabrielle. Were you going to say something? No.
No, I'm just saying that's true.
Right? So our financial world is ever changing. The gold standard was a thing until the early 1900s. It doesn't exist. The gold standard is no longer here. So it's ever changing. What we want to understand is that as we are introduced to these new products and these new opportunities to use our money, then we can understand that when you are using something that is going to benefit you financially, you just have to study about it, make sure that this is going to fit, it's going to be a good fit for you or for your clients. You're an agent as your client, but it's not the one thing. There are lots of things. There's just like there's lots of banks, there's lots of opportunities. This just happens to be something that I highly recommend, and I use it myself. I wouldn't recommend it if I didn't use it myself, and I didn't have one for each one of my children. It would not be ethical for me to say this is awesome, but I don't have it. So I have it myself, and I have it for my children. Therefore, I highly recommend it. But it's not the only solution for your money. This is something that I highly use it. I use it every day, but it's not the only thing that's out there. Why is it that it's not talked about all the time? Because it's something that the regular traditional banking industry does not want you to know that. Are you able to see the full definition or the pictures in front of it on your side? Can you see all the letters? The
Yeah,
full
I can
paragraph?
see it.
We
Yeah?
can move our camera where we can see the whole thing.
Okay.
We can read
So-
the sentence, but we can't see the whole thing regarding how do I open a bank account and after that.
Okay.
Gabriel,
So
if
here,
you click on the images of the four of us and you just touch it with your mouse and hold it and scroll it down, you can move the images of us.
No, I did that. I just can't see what else is after. How do I open up a
you
bank
can't,
account?
yeah, you can't click this over here. Right. So let's read this over here. Family bank. So instead of a regular box bank or a community credit union or a local bank, what is a family bank? So let's study what a family bank is, because that's what we're going to talk about today. So a family bank is a family funded entity. So family funded, which means that I fund it, my husband funds it, my parents fund it, a family funded entity that offers financing only to a family member or to your trust, family owned assets. So I offer financing to myself, to my children, to my sister, so I offer financing to the people around me. So it's a bank. It's an entity that I'm going to have money in there, and I can finance things for myself, for my family. It is not a commercial bank. So it's not somewhere where I'm not going to open a Bank of America. I'm not going to open a Federal Bank. This is an entity that is going to work financially for me. It's going to be my personal bank, but I'm not going to be doing business. So I don't need a business, commercial, financial banking license to operate my family bank. It's my bank. It's going to finance my life, my purchases. I can use the money however I want it, but it's not going to be a commercial bank where people walk into my house. Now I have a debit card and Federal Bank. It's not it. It's not a commercial bank, but it is a family business, or it's a family trust, that provides to me and to whoever I want to put the money in their hands. Loans, equity, combination of funds. So I could use this money however I want it, but it's my funds. It's the money that I use instead of putting my money into the hands of whatever bank I choose. We're going to use Bank of America, for example. Instead of opening an account at Bank of America, I'm going to open my account. Okay. It is to foster responsibility, to behavior, encourage productivity. And so a family is going to learn how to treat money differently because I have my own bank instead of putting my money into the hands of a box bank. So far, so good. Any questions about that? No? Okay. So it's not a box bank. It's something that it's an entity that I'm going to open. It's going to be my money and that I can use my money however I want it. It's not going to be a commercial bank where I don't have to get a license through the federal government or the local whatever. Okay. Let's see what are the benefits of this type of product. Okay. So how, I don't have it here. I'm sorry. I don't know where I lost my thing, my little picture. I have to put it up. But why is it that we do that? So why is it that I'm going to do such a thing instead of using a box bank? So let's see how banks work. How do banks make money? How do they work? Because we were doing a phone call last week and Ann says, well, how do they make money? She was talking about another part. But when we learn how banks make money, then we understand how important it is for us to open our own bank. Because then we can make money, right? So I don't know about you guys, but I'm like that. When a person says to me, you know, your stuff broke down, let's call it a professional to come and fix it. I am so tempted to just go ahead and do it myself first because I love learning new things. So, you know, my mom's AC is glitchy and the technician was here fixing my dishwasher. And I said, well, could you come over to my mom's house and kind of tell me what could be wrong? And he's like, yeah, sure, this switch. I just learned something that it would have cost me a couple $100 to call somebody to come and do like that with the switch. I didn't have to. So I'm learning that. So I want to learn before I go call a professional. I like to do it myself. Same thing with banks. And that's what we're going to learn today. The family bank is going to help you make the money like the box bank makes money. There are some functions that the bank has that you are not yet capable of making money on. But eventually you're going to grow your bank to the point where you won't need the box bank anymore. Right? We don't need it. And people like Gabriel, the age group that he's at, and even your age group, guys, there is a certain, I'm not a conspiracy theorist, but there's a certain mafia around the banking industry that keeps people bonded. There's a bondage that you need to have a bank account. You do not have an option. You can choose your bank, but you must have a bank account. In the American economy, you must have credit. You cannot buy big items unless you have full cash to purchase a house or purchase a car cash. You need credit. And so that's a mafia. That's an industry that has you it's bondage. And I don't believe in those things. I want to do it myself. Like I want to learn how to flip the switch and do it myself. So that's why this is so interesting to me. So a family bank will be my way to make money, just like the big banks make money. So tell me, Shada, open your microphone and tell me how do banks make money?
They invest your money.
They invest your money. Okay, very good.
Maintenance fees, interest charges.
Fees and charges. Excellent. Okay. Riza, any idea? No, that's it. Yeah, exactly. So 90% of our money that is put down as a deposit. So we get our paycheck and we go to the bank and we put our money there. We have direct deposit. 90% of that, they can go out and reinvest that money. They're required to keep 10% of that money, but 90% they can reinvest. FDIC is an insurance that banks need to have. And they protect your deposits up to $250,000. If you have any more than that money there, you're not protected. If the bank closes or they decide to have some kind of shenanigans over there, $250,000 is protected. Everything else is not. So it's not really secure that in that sense. But let's say that there's a money run. Let's say that, you just a few months ago, there were some banks that were closing, right? Because they were going bankrupt. I mean, did you ever think about that? How can a bank go bankrupt? How can a
People
bank?
take out-
They misinvested your funds and now they've lost it.
Exactly. That's right. Gabriel, did you have anything to add to that?
I was just gonna say if people take out all their money at the same time.
There was a cash run. Exactly. So in calamities, in times of uncertainty about the banking industry, people get worried and they go out and get cash. Like right now, we have a storm. So a lot of people are taught to go and get cash because if the ATMs won't work, then you can't, or your debit card. So I have cash on hand for certain things like that. But let's say that we know there's going to be a stock loss or whatever, and everybody decides to go out and cash out their accounts. They do not have the actual green money inside their ATM enough to cover all that withdrawal. They don't have it because they take it out and they invest it. So while we're sleeping, we can direct deposit our bank account there and our paycheck. And while we're sleeping, they're investing because the rest of the world is awake. Half of the world is awake when we're sleeping. They're investing that money. And so we're not going to be cashing out our bank accounts overnight. Meanwhile, they're earning lots of interest on our own money because they don't have any money. Banks cannot make money. Banks can only repurpose money that we deposit. So it's our money that they're reusing and then they're returning to us at a very small rate. If you go to open your app right now and check the APY that you're receiving from your deposits on your regular savings and checking, it'd be a sorry excuse for a bank, right? Check to see what is it the bank is paying you back. If you have a bank that's paying you 1%, you are good. Like, this is awesome. This is a great rate of return for a bank right now. There are some savings accounts that are offering high yield returns. Okay, but they're an investment, which means your money is there and it's not immediately available to be cashed out.
Where did you check?
Check APY.
But where? I have Bank of America.
So go to the little chat thing on the very top.
Yeah.
And ask APY and see what it says. I know what a Bank of America is. I have a bank account at Bank of America, unless you have this different account. Ask APY on Erica on the little chat thing there.
It's saying you can earn interest on certain checking accounts. Would you like me to take you to the section where you can compare options?
Yes. Let's compare options. Brisa, do you know how much you're getting APY on your bank accounts? Go to savings. See what they're giving you on savings.
Sorry, and I had a lot of things going on. I lost how do I get that?
So do you have Bank of America or do you have another bank?
Bank of America.
So go to Erica is the little chat thing on the very top and ask for APY. APY is your annual percent yield. Or just Google. You can just Google what is the APY on my Bank of America account.
It opens credit card, savings, checking.
Savings, usually. The checking account is going to give you a ridiculous amount.
I don't have a savings account on Bank of America, just checking.
Okay, so go ahead and get whatever. So checking usually is nothing because the reason why they cannot offer you an APY is because it's not an investment, right?
Yeah, I can't find. I don't know.
I don't see it.
You don't see it? Okay, let me help. Yeah. Okay. I'm looking over here. No, they don't even want to tell you because it's so embarrassing.
Like, it's supposed to say how much you're getting back.
in percentage. So when you look at the end of the month and they deposit, they're like 5 cents, 8 cents, 10 cents. Have you ever seen that interest deposit? Have you seen that in your bank account?
I've seen like a 1 cent
I've
interest.
seen a 1 cent like once every couple of months, not even
Yeah, like a
monthly.
1 cent.
I will look over and see what is the, okay. Bank of America savings account option, base APY is 0.01%. You see that?
Mhm.
Can you see that?
What does
Yes.
APY stand for?
Annual percent yield.
Yield.
Annual percent yield. So in a year, whatever you deposit there, they're going to calculate that 0.01% for the full year.
Wow.
Month. So let's say that you have $100 there, okay, on that bank account. Times 0.01 is 1 cent, correct? They're going to get this 1 cent and divide it by 12 and deposit that amount monthly in your bank account.
Yeah, that's awesome. I can't wait.
Right? But if you want a car
Gonna
loan,
make a huge dent.
but if you go back to, so you put money there every month, right? But if you go back to Bank of America and ask them for a bank loan, how much percent do they charge you on a loan?
I don't even want to know.
9-10% on a good credit person, right?
Yeah,
If you
it depends on your credit score, how old you are.
Yeah,
How
my
much-
card was
Yeah.
17.
there you go. Right? If you go buy a house nowadays, it's 8-9% interest rate if you get a home loan, but they're giving you 0.01. So everybody deposits $10,000 there every month. They take 9,000 out of their money, go invest somewhere else where they make 200-300% more on that money. They double, they triple that money because they're investing a lot of money, right? And then when you go back and you say, I want not your money, right? Because you can withdraw your money at any time when the economy is good. But let's say that you go over there and say, I only have 10,000 in my account, but I want 50,000. Will you lend me some money? And they say, yeah, we'll lend you, but not at 0.01%. We're going to lend you at 10%. We're going to lend you at, this is your money. This is your money that over time you have deposited there and then withdrew, but deposited, right? You gave them money to go grow. Meanwhile, you have to pay them a fee when you want to borrow money that you have deposited there. That's how banks operate.
Anna, have you heard of the Apple credit card?
Yes.
A lot of people, I mean, I was talking to someone and then he was like, why do I want to do that if Apple is doing 5%?
Apple is doing 5%. Trinity Bank is doing it. Marcus is doing it 5%. Those are investments. Those are high yield savings accounts.
Yeah, but what do I say to someone that says, oh, why do I want to do whole life if I can just do Apple?
Because Apple is only a portion of the greater benefits. And so we're going to go right there. So this is the difference in between a bank and your family bank. So you go to Apple, you go to Marcus, you go to all these high yield accounts. Okay. So these accounts, you deposit your money there and then it grows. So let's say that I leave it there for 12 months. They're going to calculate that. So let's say that I deposit $10,000 there. So let's do it. Get a calculator. So we're going to do that. Let's say that we go open a bank account at a high yield. So not Bank of America, not Wells Fargo, not Chase, because they're giving you 0.0 whatever. Let's get a high yield. Let's talk business. Marcus is one that I promote because I use it for myself. Again, I'm going to promote what I use. Marcus is giving right now 4.3%, but if you share with a friend and they use your link to open, it's 5.3% for 3 months. So let's put it $10,000. Open your calculator and calculate $10,000. And then you're going to earn, let's go down to the 4.3 because I say that you're not going to share but one time. So 4.3. So times 4.3%. So you're earning how much for the year?
430.
Right. Now get 430 and divide it by 12 because it's for the full year, but they're not going to deposit it one time. They're going to wait and they're going to deposit monthly the amount that, so 430 divided by 12, how much are you getting per month? 35.83. Very good. So isn't that much better than the 2 cents that you're getting at Bank of America?
Yeah.
Right. Now, if this is the difference, Gabrielle, this is the answer. So you have them do this over here. If by any chance they need the money and they withdraw that 10,000 from that bank account, there's going to be a recalculation. So this is January. I deposited $10,000 over there. On the 30th of January, I'm going to get 35.83 there because the 10,000 is there. But let's say that February 14th comes and it's Valentine's Day and I want to buy my husband a motorcycle and I take out 5,000 out of there. When it comes time for them to calculate the February APY, it will not be calculated at 10,000. It will be calculated at 5,000. 5,035. So they're going to add a 35. So I take 5,000. They have deposited 35. So they're going to calculate $5,035 times 4.3% divided by 12. And at the end of the month, that's what they're going to deposit on my bank account. So if I do any other banking except for a life insurance accumulation product, when I withdraw the money, I stop earning interest. That is the difference, Gabrielle.
I see. So what you're saying is the compound interest, right?
No, it's the uninterrupted compound interest. Uninterrupted compound interest.
So what's the difference between compound?
Compound interest is exactly what we learned right now. So let me explain compound. This is compound right now. So I have just earned 35.83 on my 10,000, correct?
Yeah.
So get your calculator. $10,000 and 35, 10,035. So 10035. That's what I have on my bank account on January 31st, right?
Yeah.
And then I withdraw $5,000. So now I have 5,035, correct?
Yeah.
So let's do that times 4.3%. So that times 4.3%. Now I have
216.
216. Let's do 216 divided by 12. How much is that?
18.
18. Now we're going to add this 1804 plus the 5,035.
Uh-huh.
So now I have 5,053.
Yeah.
So $53 was earned just because the money sat there. That's compound interest. Money making money. I didn't do anything to that money. I just put the money there. The bank made me money at 5%. Now, for the bank to give me 5%, how much money do you think the bank is making behind the curtain?
Probably 10, 15.
200.
No way.
Much more. Because not only they have to return to me 5%, they have to run their machine. They have employees, they have insurance, they have brick and mortar buildings, they have lawyers, they have all kinds. They have to run their machine. They're not making 20%. They're making 200, 300, 400%.
Wow.
Because they have the capital to invest, and they can lose because they have billions of dollars.
Yeah.
They can afford to lose $1 million on an investment. Does it make sense? They have the guts to invest in high yielding products because they can lose it. I don't have the guts to lose $2,000 on an investment, but they have the guts to lose $1 million because they have billions to invest that we put in there, right? And if we're earning 5% on a year, they're earning 20% daily there. They're earning a lot more because they're investing in high yielding products. They're betting it. They're investing in long-term products and short-term products. They're investing in life insurance policies, guaranteed products. They're investing everything, right? And they're returning to us only 5%. So that's compound. So next month, let's say that I don't take any money out. I'm going to do this amount, which is 5,053 times 0.3%. That's 217. 217 divided by 12 is $18. So $18. Are you guys following me?
Yeah.
Plus the 5035. Now I have 5053, and it goes on and on and on. So now the money is making money. Let's say that I don't withdraw any more money, at the end of the year, I'm gonna have more money. I have a client that sold a house, put 150,000 on market. She's earning $1,000 a month in making money. $1,000 is coming in because she put the money there and it's making money for her. $1,000. She's not gonna touch that money. The moment she takes that money out, it decreases the amount that they're gonna give her because it's calculated based on what's deposited, correct?
Mhm.
Okay, so that's how they make their money. That's how we make our money. All right. So if we were to open our bank and have that same kind of development for our bank, where me myself personally, I take my money out of my bank and I go invest at 20%. I go invest at 7%. I go invest at 10%, but because it's my money. So if my money is by itself growing at 5% there, and then I have an opportunity to take that money out, go out and invest on a short-term investment somewhere, 6 months, 9 months, 3 months, that grows me at 20%. Then I take all that growth back and return it to my bank and it continues growing at 5%. Wouldn't that be a great bank to bank on, especially if the money's all mine? Right? So imagine if Bank of America, imagine if Marcus, which is giving you 4.3, were to return to you the 4.3% plus the 10% that it grew behind the curtains, or 20% that it grew behind, and put it all in your bank. That's what you can do when you open your bank. Curious so far?
Yeah.
Because that's what we can do. When I open that entity that is Anna Farrell's bank, and it doesn't cost me any money to open that bank, and what it costs me is the deposit that I put in there, then I know that all that money is going to go towards the ends that I want to create for my family. So I'm growing that money. I'm growing that money by sitting there. And if I want to withdraw to invest it somewhere else, I have the freedom to do so. All of it, or some of it, or a little bit of it, or a lot of it. So how do you do that? You use, when you open your own bank, you need some types of documents, right? Like just like other banks, you need an ID, whatever. Over here, you need your type of documents beyond your regular documents. So not everybody can open a family bank. There are some types of family banks that give you more money, but they require that you are a citizen, that you have your tax returns, they have everything. Sometimes you don't have that. We have clients that are not Americans and they don't have the document. There are some products, but they don't bring you as much APY because it's a riskier investment, right? It's a riskier product. Just like a bank will not open up a bank account to somebody that does not have a document. So is the family bank. You need to be approved in order to open a bank that is a family bank. But it pretty much, we can help everybody. Okay, it's hard to find a person that you cannot open a family bank.
Is Mutual the best one to invest into?
Lafayette and Mutual are the best if you have a social security number or an ITIN number. If you don't have either, National is the next best.
But
You
I'm
can
talking
have
about, you're saying national, but I'm talking about for whole life.
National has whole life.
Really?
People that don't have documents, correct? Yeah.
Man, what the heck, bro? Why am I learning this now? I didn't know that.
So people that have a passport can open a whole life policy at National. It's just a little bit different. It's not going to grow as nicely as a policy at Mutual Lafayette, but it is available.
Is it like an IUL?
No, it's a whole life policy with cash value.
Does the IUL have cash value?
Yeah, but you have to lock it in for 10 years.
Okay.
Okay. Okay, so a family bank can be opened just with pretty much everybody. No, it doesn't grow it grows differently based on who you are and what your status is, but we have that bank. How do you open a bank account like that? If you're young, you pretty much need your name, your birth date, and how much money you want to put in there. That's it. They're not going to require much from you. If you are the age of 27 or older, Then they're gonna ask you a little bit about your health. Make sure that you are not gonna die anytime soon, that you don't have any chronic diseases, whatever. If the scale of your weight and height is a little bit off skewed from regular standard weight height tables, then they're gonna ask to have a nurse come to your house, take your blood, take your urine, do your blood test, or what you call it, blood pressure, just to make sure that you are not gonna die anytime soon. That's it. And then you can be approved. Based on your health, you can be approved for a very nice bank that's going to give you a lot of return. If you're not healthy, you can still be approved, but it's not going to return as much APY to you because you are a risk, right? So why does it have to be attached to your health, where a regular bank they don't care about your health? There is a law in the United States that is the only law that protects this type of a family bank. The IRS has a specific law that allows a person to open a bank, this type of bank, that is going to grow a lot of money for you, where you don't have to pay taxes on the money that grows for you. And you can look it up later. It's the Rule 7702, Rule 7702 of the IRS. And you can Google that up later so you can see. But in all of the tax code, in all of the IRS, and you know the tax code is unreadable, right? Nobody can read that thing. Every year is different. That is the only type of bank that you can put your money in and you can have a return of your money, and the money that grows into that bank is tax-free. That is the only thing. If you invest in stocks, you have to pay taxes on your gains. If you buy and sell a house, you make money, you have to pay taxes on that money. If you have a business and you have income, you have to pay taxes on that income. If you cut hair and you receive money on Venmo, you have to pay taxes on that money. Every money that is earned, you must pay taxes, correct? Because the IRS is the agency to take money from you. Maybe the young people can run for office and change that. Right now, we're kind of screwed. We got to do what we got to do to survive. But young people, you run for office and you do something about that. I would vote for president if they say he or she wants to do 5% flat tax. I would totally vote for you. If I become a congresswoman, that's my platform. 5% flat tax.
Do it, Anna. I believe in you.
Because if
You
the
have my
government
vote.
cannot pay for their crap with 5% of what we earn, they are not managing their money wisely. But that's another talk for another day. So we have to pay taxes. The only product that you can put money in and invest, stocks, bonds, mutual funds, business, casino earnings, inheritance money, any of that, if the only product is on the code 7702 that allows for this one product, the family bank, but it must be attached to a life insurance policy. If it is not attached to a life insurance policy, it loses the benefit of tax-free growth.
Anna, just to be clear, you said through life insurance, you don't get taxed if you receive a life insurance check if a family member dies?
Correct. If it's the earning from a whole life policy, life benefit is tax-free. Whole life policy. There are life insurance policies that are taxable, correct? If they're not
National?
structured, it's not the company, it's the product.
What about the one that we sell, that I sell?
Depending, the whole life policy with mutual is tax-free for inheritance, correct?
But I also sell national.
I know. I need to know. You're talking about term?
Yeah.
Depending, I have to look.
Okay.
I have to
'Cause
look.
I thought it was
Tax-free.
tax-free, but I could be wrong.
If it's chronic illness or terminal illness accelerated benefit, it may be taxable. I gotta look.
Okay, I'll write this down so I don't forget.
Right, yeah, write it down for me. And I'll write it down as a message and I will look it up later. Anyways, if it's if it's your money, right? If it's your money, you don't want to be taxed because we already pay taxes on it when we earn. Let's not pay taxes when we invest. But any other product that you put in the market, it will be taxable. So you want to make sure that you're investing and you're putting your money on a place where you don't have to pay taxes on it future. And that's the type of product that we have as a family bank. So the family bank is an investment bank where you put a life insurance policy in it with the minimum coverage in order for you to get away with not paying taxes on the growth. That's the ticket, right? It's like I want to have steak, but I'm going to go to Fogo de Chão because I also have salad for free. Like I'm not going there for the salad, but it's included. So I'll take advantage of it. Okay. Does it make sense to you? I want to invest money and I want to grow tax-free. So I'll take the life insurance. It's a bonus. It comes with the package. Right? Okay, you got it? So far good? Awesome. So this type of bank, you can open it. How do you open it? You have to talk to an agent. You cannot just knock on the door of a life insurance policy, or there's no family bank to knock on the door and say, or go online. You need to talk to an agent. These companies don't deal with clients. They deal with the agent, and the agents then build a product for you. Why is it that the companies don't deal with the clients? Because each client just needs to have a bank structure that is going to supply them with the needs that they have. Each client is different. The product itself is very fluid. You can have a bank account that is just to protect you from liens. So let's say you have a lot of money under your mattress and you know you're going to be sued, or you have the possibility of being sued. There's a type of product that is just to protect you. There's a product that is, you say, okay, I have enough money in the bank. I have my kids. I don't want to leave. I'm not interested in saving money for my retirement. I just want to leave money for my kids when I die. I want them or my wife to be protected, or my kids to be protected. There's a type of product for that. Or there's another person that says, I forget about my kids when I'm gone. That's their problem. I'll figure it out. They'll figure it out. I just want to be able to grow my money and burn it while I'm alive. There's a product for that type of person. So because the companies don't want to deal with that kind of personal relationship, and they want to make sure that you are not dead or dying anytime soon, they want the agent to have a relationship with their client. So that's why the company instructs the agent, and the agent then instructs the client. So the relationship is with the agent, not with the company itself. So you need to open an account like that with an agent. And the vast majority of the agents have options. Like you're talking to Gabrielle, we deal with all kinds of banks that have these policies. But there are some agents that are captive to one. So let's go back to Box Bank so you can have an idea. You say, I want to open a savings account. And if you walk into an agent that wears a Bank of America t-shirt, he's only going to sell you a Bank of America savings account because he's captive. He works for that business. He cannot sell you any other savings account. But if you work with a broker, he has savings accounts from Bank of America, Chase, Wells Fargo, Capital One. He has lots of savings accounts to choose from. We are brokers. A broker has the best product for the client, not a captive product that is bound to sell just that one. Okay, so that's the difference between agents and agents. When you open your bank, you can then deposit all of your earnings into this bank. The moment you do, you create an earning that is uninterrupted. And that's what we talked about earlier, Gabrielle. At the moment that you deposit that money into your bank account, it starts growing at an APY. And I'm not going to divulge an APY here, but we're talking in between 3.75 and 5.2 for the life of your contract. It's not going to end or change rates. Once you open that account, they're going to give you a rate, and that's going to be like that for the end of your life or the end of the policy. Okay? It's not going to change if you withdraw money from it. And that's the difference in between our regular bank account and our family bank account. My family bank account is going to allow the money to keep growing, even if the money is not inside the account, which is crazy stuff. That's crazy talk. So we talked about, I deposited 10,000 in January, and in February for Valentine's Day, I wanted to buy a motorcycle for my husband. I took out 5,000, which means it's only 5,000 growing, correct? Now, in my bank, when I took 5,000 to invest on that motorcycle for my husband, it's like I never took out. It's 10,000 that is continuing to grow there and grow at an APY of my contract, even if I took my money out. Does that make sense? So that's the difference between a box bank and my bank. Avengers is on the picture.
God, he saw the video that
The video.
Ignacio sent.
So the reason why, there you go, Captain America. Woohoo! Captain America is on the call today.
He
He
loved
showed-
it because he was like, I get it. That
You got it. That video was awesome, wasn't it?
was a good video.
yeah.
So that's the difference between a regular bank and our bank. Our bank has uninterrupted compound interest when other banks have just compound interest. On the deposited money, the moment you withdraw, you lose the growth. Over in our bank, the family bank that we have for ourselves is uninterrupted. The reason why we want to emphasize that is that then we teach our clients to deposit all of your money in there instead of just saying, what money should I put in there? Oh, the leftover money. No, it should be all your money deposited there. Because even when you take it out to pay your bills, it's growing interest. So that's a benefit to you and to your family. And that money stays there growing. You pull it out and you put it in, you put it on and put it in. And so it's the same way as a regular bank account. The difference in between your family bank and your bank account with regards to putting it in and taking it out, it's not a Zelle transfer. It's not immediate. It takes 3 days to go from your family bank to your regular bank account to then pay your bills from there, right? And it takes 3 days to go from your regular bank account to go into there. But once it's there, it starts earning interest. So this is an online bank account. Nobody can go in there, knock on a door and say, I'm mad with the manager because the manager is not there. We are the manager. Your agent is the one that you need to bring your grievances to, because we can fix your problems for you. Because again, the company doesn't want to talk to you. They want to talk to the agent. So we talk to the agent. The agent is your bank teller. Okay. Once you do that, you are able to use this policy forever. This bank account is open forever and you use it until you die. You can will it to your children so that when you pass away, the balance of that account is then passed on to your children. Except that because there is a life insurance policy attached to that bank account, they're not going to get just a little money that you had on your bank account. They're going to get a life insurance payout. The vast majority of wealth that is the United States families come from life insurance payout. Most families that were poor became rich overnight from the death of their patriarch. The vast majority of American families have life insurance policies, and they have gifted their family. They leave that as their legacy to their family. So you can be a hard worker, you pay your little, you put your money in a little bank account there, but you have this extra benefit from your bank account that when you pass away, your children become immediately wealthy from your passing. So you don't have to actually leave them money. You just leave them this bank account with the policy that allows them to then become wealthy just from your passing. So it's inside your investment, but it's not the focus of your investment. You're opening that bank account because you want to have the money growing uninterrupted, but you get that extra benefit of the death penalty payout for your family and when you pass. Okay. Any questions? Anything that you want to add, or anything that I didn't leave clear to you?
I was talking to a friend of mine about life insurance, and she pretty much made a comment saying how there's a conspiracy. Of course, it's just a conspiracy that the market will be crashing soon, and that she doesn't want to invest in life insurance because the market will crash. What would you say to someone that says such a thing like that?
Okay, so if the market crashes, what happens to the money? Hi, Ricardo.
If the market crashes, what happens to the money?
Yeah.
Which money? Like the life insurance money?
Well, she's afraid of the market will crash and she should not be investing in life insurance policy. What is her what is her option?
Not sure.
Right? Because if the market crashes and we have no access to money,
Yeah, but how's
nothing
she gonna? I guess her concern may be, how am I gonna afford life insurance if it crashes and I don't have a job anymore?
well, you don't have to pay out. So if you have life insurance policy and you've paid into premiums there, right? You put your money and the money's safe there. The life insurance policy will not collapse because it's a mutual product. Ricardo, a gente já começa já já, tá? Em português. It's a mutual product, which means all the members are funding it. The mutual company itself will not collapse. What will be a difficulty is to withdraw the money from there. So if there's no banks, the mutual company can send you a paper check and you can go cash it at a cash checking facility. But what are you going to do with cash if the banking industry, I mean, you know what I'm saying? When we come to that point, and it's going to come, I don't believe that the banking industry is going to collapse totally, but I do believe that it's going to be a devaluation of the dollar. That I do believe, just like it happened in Brazil.
Like
I do believe.
depreciation?
I do believe that because there's no way to fix the printing of so much money, but that's another story for another day.
Yeah.
Okay.
Yeah. What
All good?
savings do you use?
Say it again.
What's the savings account that you said you like to use as 5%?
Marcus, it's on my website.
Okay.
You go to my website, I'll pull it up again for you. Am I sharing screen? Let me share the screen here. I'll show you where it's at. If you go to my website, annafarrell.com, and you click on this little thing here, I have a link in there for you to grow as 5.3% instead of 4.3. Can you see it?
Markets by Goldman.
Marcus by Goldman Sachs. Yep.
Okay, thank you.
If you click here, it's going to be directed to the page to open the account. And because I'm sharing with you, it's at 5.3 for 3 months. It's usually 4.3, but because you're using my link, it's going to be 5.3.
Okay.
Okay.
Amen.
I got connections, you know. Okay,
Yeah.
guys, I am 5 minutes late to the Portuguese group. I'm going to turn this off. Okay.
All right,
I'm gonna-
thank you, Mom.
So this is on my website. I upload this later, not today, but I upload it on the website. So it stays there. Okay. So you guys can rewatch it.
Thank you.
Thank you. If you have
Have
any
a good
extra
one.
Thank
questions,
you,
send them
Anna.
right away. Okay, Brisa, I got your message last week. I didn't get a chance to call you because I have the
I'll be
Portuguese-
back in Portuguese class because Isabella didn't let me pay attention to a lot. So
Okay.
I'm just staying.
In the morning, I can talk better. After class is
problem.
crazy. Okay, I haven't cleaned the
No
dishes
problem.
yet. Okay, thank you. You guys have a great night. Bye.